Hello traders, Gary Wagner here. It is 10:25 in Honolulu, 4:25 in New York on Tuesday, 21st day of May, 2024, and this is the evening report for gold and silver. With recent gains culminating with yesterday's gains taking gold to its highest effective close on record in both spot and futures pricing, it is not unusual to see profit taking take place the following day. In the case of today, gold did trade lower, trading to a low of $2,408.50 and then recovering. It's been off about $1 or $2 all day. It is currently down $4.50, with the most active June contract fixed at $2,425.80. Silver continues to remain strong, and even with today's decline of 17.5 cents, a decline of 0.54%, seems exceedingly solid. Although it is trading lower on the day, it is trading above its opening price, and while its percentage decline is roughly double that of gold, considering that yesterday and the day before we had silver up in excess of 3% on each day, today's decline can be considered mild. Over the last 4 trading days, the dollar has been moving to the upside, but with incremental small moves. Today, the dollar index was up, but only fractionally up 0.02%, taking the index to 104.655. This first chart is a 30-minute candlestick chart of gold futures. I want to use it to illustrate when and how the sell-off occurred and how traders bought the dip. This little arrow here marks the beginning of the trading day. We can see that gold was trading to a high of about 24.41 and traded sideways with a downward bias up until 21.30, the end of yesterday. That's when we saw selling pressure come in fairly hard, trading to 24.34 on a half-hour basis, then closing at 24.24, giving up $10. The next half hour it would give up an additional $2. Then that was followed by about a $5 drop and then another $4 drop, hitting this bottom before moving up to the highs of the day, which took gold to $2,438 and currently settled a few dollars below yesterday's close at $24.2510. When we look at the daily candlestick chart, the first thing that stands out is the length of the lower wick. The distance between the close or current pricing and the intraday low is much wider than the open to the intraday high. Also, the real body is very much in the area of yesterday's real body. As long as we see a series of higher highs, our current trade will not be stopped out. Remember, our stop is sitting just below $2,403. For now, maintain your current long position in gold as well as your current stop. Recent moves in silver have been impressive to say the least, considering that it had a top at around $29.25 back in the middle of April, came down and touched these lows at approximately $26.50, which took us to the beginning of May, in which we saw silver really take off with a series of 1% moves that were interlaced with very, very small-bodied candles of negligible losses here and here, as well as here. And then we had sizable moves of over 2%, well over 3%, and about 3% yesterday. All of these moves gapped above the prior close. In other words, silver closed at $29.71. It reopened at $29.87, closing at $31.25, reopening at $31.89 to settle at the highest price it has hit in years, $32.40. In my opinion, if the rally continues in gold, we will see it correspond in silver. The differential will be greater upside percentage gains during periods of rallies and greater price declines during a corrective period. but I don't believe that the move to the upside in silver is over. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.